morning. My name is Hombu. First, I would like to start off by thanking you all for taking the time off your busy schedules to attend today's earnings briefing. To all of you gathered here, stockholders, institutional investors, analysts, financial institutions, stakeholders, I would like to thank you for your continued support and loyalty. To those of you seated in the back who might have some difficulty seeing the screen, I would kindly ask you to follow along by referring to the printed materials we handed out at the entrance. Please peruse the disclaimer on page 1 carefully. I would now like to introduce today's speakers. I am proud to introduce President and CEO Nobuyoshi Fujisawa, Representative Director Nobuiku Chiba, Executive Officer and General Manager of the General Accounting Department Taiji Hitachi. Lastly, I would like to introduce Takehito Yamanaka, who joined J-Trust on April 12th as Head of Public Relations and IR. I would now like to yield the floor to Mr. Yamanaka so he can tell you a little bit about himself. Greetings everyone, my name is Yamanaka. I used to be one of the analysts who attended J-Trust's earnings briefings. I now work at J-Trust, but I promise not to forget my roots as an analyst and always strive to keep an impartial outside point of view. Today's earnings briefing call will be divided into 3 sections. An outline of the company's financial results along with an earnings forecast for fiscal year 2019, followed by a few words by President Fujisawa regarding J-Trust's strategy for future growth, after which we'll take questions from the audience. Without further ado, I would like to start today's earnings briefing. For the sake of clarity, I shall be referring to the fiscal year ended in March of 2018 as the current year. The 3 categories that comprise our financial business, domestic, South Korea, and Southeast Asia, grew at a fast clip, generating 9.2 billion yen in operating profit for the fiscal year ended in March of 2018. This translates into an increase of approximately 100% YOY. We also sold our stake in Adors Inc., freeing up valuable resources we feel can be put to better use in the form of operating capital. Finally, we booked losses to the tune of approximately 64 billion yen derived from our investment in Group Lease PCL. All in all, we registered an increase in both operating revenue and income. Please turn to slide 7. We booked 76.2 billion yen in operating revenue during the current fiscal year, up from 66.4 billion yen for the fiscal year ended in March of 2017. This translates into an increase of approximately 15%. We also posted 2.3 billion yen in operating profit, up from 600 million yen for the fourth quarter of fiscal year 2017. Please turn to the next slide, which provides a quarterly breakdown of operating profit generated by J-Trust's 3 financial businesses. Despite having to write off 3.6 billion yen during the second quarter of fiscal year 2017 as an allowance for doubtful accounts, we were solidly in the black throughout fiscal year 2018. Please turn to page 10, which contains a sectional breakdown of revenue and profit metrics by business segment. I would like to start with the segment titled Domestic Financial Business. We registered 9 billion yen and 4.1 billion yen respectively for the metrics of operating revenue and profit for the segment titled Domestic Financial Business. These figures are indicative of a highly profitable and stable enterprise. This segment suffered a small contraction YOY due to a non-recurring gain associated with the sale of fixed assets, which boosted our results for fiscal year 2017, in a downward adjustment to our book value due to the company's transition to the IFRS accounting standard during fiscal year 2018. These are thus mere artifacts with little bearing on the operational profitability of the company, which remains as strong as ever and continues its upwards trajectory. Additionally, the amount of credit guarantee by Nihon Hosho grew at an annualized rate of 65% to 140 billion yen. We're also seeing steady growth in the category of apartment loans. In addition to this, we've recently expanded our banking relationships to include a total of 8 financial institutions within the context of J-Trust Group's credit guarantee business. We also announced a new financing scheme utilizing overseas real estate as collateral for loans during fiscal year 2018. I'm pleased to announce the market response has been very positive thus far. Next, I would like to go over several metrics associated with our non-performing loans portfolio for the servicer arm of J-Trust. As you can see from the graph, the accounts receivable portfolio for Parter continues to grow at a healthy clip and stood at 772.3 billion yen for the fourth quarter of fiscal year 2018. We also conducted a review and optimization of the off-balance sheet loan portfolio we inherited from Takefuji, allowing us to increase the total loan balance to 140 billion yen. Both the amount of loan guarantees and the amount of receivables continues to grow at a healthy pace, allowing us to generate a steady income stream for our domestic financial business. I would now like to discuss our business operations in South Korea. We realized 35.8 billion yen in operating revenue. This translates into a 23% increase YOY. We also booked 3.5 billion yen in operating profit, or an increase of 13% YOY. We continued expanding our outstanding loan portfolio for the savings bank and the capital company during fiscal year 2018, despite a less favorable regulatory climate. As you can see from the line colored orange in the graph, loan delinquencies remain stable at a very reasonable level of 5.18%. We're also in the process of reducing our exposure to the risk of an additional tightening of the regulatory framework by being selective in whom we lend money to and by requesting collateral for the loans. This translated into a 22% increase YOY for the category of secured loans. I would now like to go over the metrics of loan APR, average deposit interest rates, average lending interest rates, and net interest income. New maximum lending rate limits have obviously negatively impacted loan profitability. This translated into a drop in the average lending interest rate, which stood at 12.82% by the end of the fourth quarter of fiscal year 2018. It is worth mentioning, however, that average net interest income remains stable and resilient in the face of increased regulatory pressure to limit maximum interest rates charged by lenders. Please turn to the next slide. Increased regulation governing the operation of savings banks led to an increase in the offering of non-performing notes and delinquent loans. In fact, and as I mentioned in our last earnings call with investors, one of our consolidated subsidiaries, TA Asset Management, increased its holding of non-performing debt in 3 different sales, bringing TA Asset Management's NPL loan portfolio to 258.1 billion yen by the end of fiscal year 2018. This translates into a 36% increase YOY. Our South Korea strategy consists of a recession-proof trifecta consisting of savings bank, non-banking operations at JT Capital, and the servicer business arm. This next section deals with J-Trust financial business in Southeast Asia. We reported an operating loss of 3.9 billion yen during fiscal year 2017. For fiscal year 2018, we reported a profit of 1.5 billion yen, which translates into a 5.4 billion yen increase YOY. We've carried out a strategic reevaluation of our loan portfolio during fiscal year 2018 by shifting our focus away from large corporate loans to concentrate primarily on smaller commercial loans between the amounts of 100 and 500 million yen, as well as small and medium-sized enterprise loans under 100 million yen. This new category of loans now represents about half of the company's entire loan portfolio. As you can see from the orange line on the graph, the critical reevaluation of the company's loan portfolio has translated to a decline in the NPL ratio, which currently stands at 3.3% and refers to the ratio of non-performing loans to total loans. Moving forward, we intend to expand our outstanding loan balance while at the same time preserving an NPL ratio of 3.5% or lower. As you can see from the graph, we registered an increase in the average lending interest rate. This was accompanied by a decline in the average deposit interest rate. We also registered a slight contraction for the metric of net interest income caused by a slump in lending activity associated with the Chinese New Year. We believe this to be a seasonal quirk with a negligible impact on the expansion of the company's loan portfolio. Furthermore, J-Trust Bank Indonesia has announced a partnership with Terralite to develop and implement a peer-to-peer lending service in an attempt to expand our customer base. We're also proud to announce the acquisition of Olimpindo, a financial services provider specialized in used car loan financing solutions. Through these acquisitions, we hope to replicate our efforts in South Korea and create a trifecta composed by the sectors of banking, servicer, and non-banking services with the intent of unlocking value synergistically through the interaction between these three components. I would now like to go over our results for the segment titled Non-Financial Business. We registered an operating loss of 1.7 billion yen for this segment, caused mostly by costs associated with the development, marketing, and sale of recreational arcade machines by Highlights Entertainment, a consolidated subsidiary of J-Trust Group. We expect the situation to improve in fiscal year 2019 as we adapt to changes in the regulatory environment governing the sale of these recreational arcade machines. Next, I would like to go over our results for the segment titled Investment Business. We too registered an operating loss of 2.8 billion yen for this segment, caused by a 6.4 billion yen investment loss in Group Lease PCL. The good news, however, is that we incurred no further derivative losses after the second quarter for fiscal year 2018, due to the recategorization of J-Trust's position in GL convertible bonds as monetary claim. This concludes our overview of the fiscal year ended in March of 2018. I would now like to use this opportunity to discuss the company's earnings forecast for the fiscal year ending in March 2019. Like all forecasts, our predictions for fiscal year 2019 are premised on the following list of assumptions. A. All figures presented here were compiled in accordance to the specifications of the IFRS 9 accounting standards starting with fiscal year 2019. B. An exchange rate simulation is outlined in this slide presentation. C. The exclusion of any profits or losses associated with the acquisition of Olimpindo. And D. The exclusion of extraordinary gains or losses derived from exogenous market circumstances incurred by the investment arm of J-Trust. With the aforementioned caveats in mind, our forecasts for fiscal year 2019 are as follows: 83.3 billion yen in operating revenue, 7 billion yen for the metric of operating profit, and 5.3 billion yen in profit attributable to the owners of the parent company. The current slide contains our projections for the metrics of operating revenue and operating profit on a per-segment basis. As you can see, we project an increase across the board for these two metrics, with the sole exception of the financial business in South Korea, which we forecast will generate 2.4 billion yen in operating profit during fiscal year 2019, down from 3.5 billion yen in fiscal year 2018. This 1.1 billion yen contraction for the metric of operating profit is due almost entirely to stricter government regulations and oversight, but also the adoption of the IFRS 9 accounting standard, and not due to any major change in the robustness and viability of the underlying operation. These are merely temporary setbacks, as we expect a return to an upwards growth trajectory during fiscal year 2019 and beyond. We are committed to meeting our targets for fiscal year 2019, both at the level of each individual business segment, but also on a consolidated basis for the whole of the J-Trust Group. This concludes my presentation. Thank you for listening. Good morning, everyone. My name is Fujisawa, President and CEO of J-Trust. I shall be going over J-Trust's plan for continued growth and expansion. I intend this to be an informal, off-the-cuff presentation. My relationship with J-Trust goes back 10 years, when I launched a takeover bid of what was then Zenkoku Hosho TSE-1. Over this period, we've been able to expand the scope of our operation and assets. This growth, however, hasn't been uniform. In fact, J-Trust's growth story has been characterized by episodes of rapid growth, punctuated by periods of anemic growth, like the one we find ourselves in the last 3 years. As the majority shareholder in J-Trust, I am committed to maximizing the value of the company, as well as profits for our shareholders. However, I am aware of the tremendous volatility inherent in this business. I can't say whether I actively go out of my way to seek out this kind of volatility. Maybe it's fate, who knows? But time and time again, I find myself in a position where the investment business segment I lead is bleeding money to the detriment of the remaining constituent parts of the company, which are all delivering steady profits. So I obviously feel responsible about it, but it is my belief that a desire to innovate and try out new things is what paves the way for the future. So for this reason, we intend to continue with this strategy to get rid of bad things and keep the good things. I'm sure you're concerned about the current situation involving Group Lease PCL. In fact, someone asked the question about GL during yesterday's earnings call with investors in Keyholder Inc., one of J-Trust's wholly owned subsidiaries. I can't really elaborate on the topic due to ongoing legal proceedings, but needless to say, we're doing everything in our power to protect the interests of the company and its shareholders. I've been in the finance industry for 18 years now. When I first started, I was only 30 years old, and since then I've seen a lot. I witnessed GL's situation and the fallout of the whole LiveDoor affair, as well as the demise of Incubator Bank of Japan, as well as the failure of numerous savings banks in South Korea. We acquired a distressed bank in Indonesia, which is now PT Bank J-Trust Indonesia, but have been disappointed with the failures of its management. My personal philosophy is to stay away from the banking sector, which is why I'm trying not to be a center of J-Trust's banking business. I believe running a bank or non-bank involves a strong element of moderation and social responsibility, which is why I believe in managing my own finances and those of J-Trust in a responsible manner. I would now like to use this opportunity to outline our growth strategy for J-Trust's business operations in Indonesia. As you're already aware, we acquired a 60% stake in Olimpindo, a multi-finance company specialized in used car loan financing solutions. We performed our due diligence on 5 or 6 other companies in the non-banking sector before acquiring a stake in Olimpindo. The company turned down an offer from a prominent Japanese financial institution to come with us. According to the owner of Olimpindo, this interested party was taking quite a long time to make a deliberation regarding their acquisition of a stake in Olimpindo stock. For the better or for the worse, the deliberation process at J-Trust is considerably faster, as we favor a trial and error approach, and are thus faster than other companies. Olimpindo currently has 15 billion yen in loan assets and is currently expanding its portfolio at a rate of approximately 500 million yen per month, charging 22% APR with a cost of funds of roughly 14 to 15%. The used car financing industry average is something around 16 to 17%, with monthly disbursed loans of 8 billion yen. Even though Olimpindo charges 22% APR, they can still accumulate loan assets of 15 billion yen, which means that they have good relationships with established members of the business community. Moving forward, and through their partnership with Bank J-Trust Indonesia, BJI, we intend to refinance their existing 15 billion yen portfolio into BJI, and as a result, their cost of funds is getting lower. Furthermore, we also intend to lower the interest rate charged on these auto loans to stay competitive. However, this needs to happen gradually, from the current level of 22% to the industry average of 16%. Otherwise, we'd be flooded with a deluge of new retail loan applications, which would be unmanageable. As such, our current strategy is to gradually and methodically increase the volume of auto loan originations. Olimpindo currently has 40 POS locations throughout Indonesia. We hope to leverage this existing infrastructure to provide new kinds of loans used for the purchase of agricultural equipment, everyday domestic appliances like washing machines and refrigerators, microfinancing solutions, etc. We're killing two birds with one stone because tens of millions of prospective borrowers will be required to open up a bank account at BJI, allowing us to expand our customer base while at the same time lowering the bank's cost of funds, which in turn has the effect of lowering Olimpindo's lending rate. As you can see, Olimpindo will take the responsibility for the non-banking business of J-Trust in Indonesia in order to proceed with these strategies, replacing GLFI, a joint venture with GL, because we stopped funding GLFI. I would now like to go over our operations for the domestic financial business. We continue to acquire non-performing loans from prominent credit card companies to the tune of approximately 10 billion yen on a quarterly basis. In fact, we're right on track to accumulating a portfolio of over 1 trillion yen for J-Trust's servicer business alone. We continue seeing a great purge in the servicer industry, with a great many small companies going out of business. When it comes to the amount of receivables, larger and better capitalized companies are starting to absorb the business volume. Moving forward, I anticipate new opportunities in the distressed debt market for apartment loans in suburban and more rural areas, which I believe will start to manifest themselves over the next 1 or 2 years. People ask us about our credit guarantee for apartment loans, but as I'm sure you're aware, we only offer credit guarantee for properties in prime locations in Japan's major metropolitan areas, namely in the areas of Tokyo, Osaka, Nagoya, and Fukuoka. There are apartments for which the building costs are extremely low in proportion to the monthly rent payments, which gives a good ROI, but we don't know if these apartments will last for 10 years, so we don't guarantee them. What we focus on now are properties incorporating the latest in IoT technology. We believe this would allow us to attract the millennial demographic. In fact, we would like to apply this principle at Keynote, the real estate arm of J-Trust, where we give priority to brand new properties incorporating sleek design elements combined with the latest in IoT technology. We maintain very high occupancy rates for our guaranteed properties, while at the same time expanding our amount of credit guarantee for apartment loans under strict loan screenings, and also by entering partnerships with Odakyu Real Estate, KQ Corporation, and Shonan Shinkin Bank for new products. We also announced a new guarantee product utilizing overseas real estate as collateral for loans. This is an initiative aimed mostly at wealthy Japanese investors, through which J-Trust takes these properties as collateral in exchange for guaranteed loans. These loans are made through our banking partners, which the investors then use for buying investment properties overseas. I'm pleased to announce market response has been very positive thus far for these types of loans. In fact, I've had people visit me in Singapore, where I currently reside, and ask me to introduce them to Nihon Hosho, which is the credit guarantee company of J-Trust Group. That's just how hot and impactful this product is. A lot of wealthy Japanese investors buy properties in Hawaii and other parts of the United States for tax purposes most of the time, but it's uncommon to be able to obtain a loan on these properties. Even if someone manages to obtain a loan on a property, it will still be denominated in US dollars and with an unfavorable interest rate on the loan. The product allows buyers to purchase overseas real estate in the US with long-term 15 to 20-year loans obtained through our partner banks in Japan. This system also benefits our partner banks in Japan because it allows them to forge long-term business relationships with high net worth individuals. We've managed to resolve certain regulatory hurdles by putting Nihon Hosho in charge of managing these overseas properties used as collateral. We were the first to realize and make an effort to tap into the huge potential in this area. Next, I would like to provide an outline of our strategy for the financial business in South Korea. The introduction of the new IFRS 9 accounting standard involves higher provision requirements. We expect these extraneous circumstances to have a negative impact on the company's bottom line, but to have a limited impact on the sector's growth. We realized 3.5 billion yen in operating profit for our business operations in South Korea, which puts the sector more or less neck and neck with the domestic financial business. The South Korean business continues to grow across all three categories of banking, finance, and servicer business. I would now like to discuss the sector titled Financial Business in Southeast Asia. As you're aware, BJI was able to turn a profit just 3 years after acquisition. Moving forward, we intend to continue expanding the bank's loan balance, which will be gradually absorbing Olimpindo's loan portfolio. Furthermore, we've also completed the modernization of our core banking system, which will allow us to attract more depositors and as a result, lower the cost of funding for BJI. Not just this, but we've also entered into a partnership with Shikoku Bank in January of this year. This is an initiative designed to leverage BJI's expertise in the Indonesian market by providing business matching services to Japanese regional banks, customers, and institutions. We intend to continue expanding the scope of these partnerships. Then there's JTII, collecting non-performing loans of BJI, which was recently successful in recovering the full book value for NPLs previously held in BJI's balance sheet. It's hard to collect on distressed debt in Indonesia. It's a morose process taking upwards of 3 years. People are generally willing to negotiate when the amounts are small, say 1 or 2 million yen, but the situation changes drastically for larger amounts, like 500 million or 1 billion yen. Interest and damage payments are also high for them, which is why they try to negotiate with JTII to end the procedure as soon as possible. Some people don't keep their word and simply flee, sometimes repeatedly. However, we're literally the only business in town when it comes to the collection of NPLs in Indonesia. In a nutshell, it's a tough market presenting tremendous opportunity. Next, I would like to discuss J-Trust's incursion into the Mongolian market. This project's genesis goes back 3 years to a company I'm involved with. 3 years ago, we started an auto financing company for Toyota's official dealership in Mongolia. The company in question was founded by a famous sumo wrestler as a family operation. Of the 3 Toyota official dealerships in Mongolia, the company has contracts with 2 of them to finance new vehicles in monthly installments at a monthly rate of 1.5% or 18% APR. The months of June, July, and August are always the seasonal peak, so the company will be offering a lower monthly rate of 1.4% or 16.8% annually. The company has about 1 billion yen in their loan portfolio. The industry average for used auto loans is somewhere in the vicinity of 30 to 40% annually. This is a good thing about Mongolia, namely the fact that despite it being a relatively small market, legislation is still very lax, with no legal limits on maximum amount rates and favorable tax conditions for businesses. Moreover, we believe this might be a good opportunity to invest in distressed banks affected by the collapse of the commodities bubble in Mongolia a few years ago. One of our business relationships within the context of J-Trust Group's international operations was levied an administrative monetary penalty by the Japanese FSA last year. The Thai SEC later filed a criminal complaint against the same individual. This unexpected chain of events set us back a few months and delayed the company's ascension to the first section of the TSE. We're also taking steps towards getting listed on the first section of the TSE. This includes seeking outside counsel from several prominent bookkeepers in an attempt to reorganize the organizational structure of the company in a way befitting the first section of the TSE. Right from my days at university and later after graduation at B Japan, where I became president after only 2 years, etc., I was interviewed by them not only about myself but my relations to individuals, my own company, related companies, and its directors. Everything was checked completely, and they didn't have a problem being brutally honest in their constructive criticism. That's how I conduct myself here. My predictions aren't always correct, but I always say what's on my mind. Facts are facts, and I believe it to be my duty not to lie or deceive, but to present things as they are in a very candid manner. Which is why I've just shared the fact that we're currently working with a prominent bookkeeper in order to gain access to the TSE-1. Regarding dividend payments, as I'm sure you're aware, J-Trust has maintained a continuous dividend payout record since I submitted my takeover bid back in 2008. While we believe in the importance of CapEx, we also believe in always rewarding our stockholders in the form of a dividend. As the company becomes more profitable with a more predictable revenue stream, I would like to revisit our dividend policy. By this, I don't mean I want you to wait 10 years for us to get our act together. For this reason, we started a new incentive program geared towards rewarding our shareholders. Investors will be rewarded in Rakuten loyalty points. Why Rakuten? Simply because we have a very important relationship with Rakuten. Lastly, I would like to address the issue of a potential share buyback program. Are there any plans to implement a share buyback program? We get asked this question every single week, without fail. Maybe it's just a small, very vocal minority making the same requests over and over again, but share buybacks are a delicate issue prone to conflicts of interest. We could have used a share buyback program to prop up the company's share price last year, but since we are always looking for M&A opportunities in the financial business in Southeast Asia, we were unable to implement a share buyback because of M&A deal breaks, etc. I personally own a substantial position in J-Trust stock. This means I am aligned with the investing public. In order to avoid any possible conflicts of interest and guarantee an insider-free situation, I always consult with our information management. So of course, should the opportunity present itself for us to acquire shares in J-Trust at a discounted price, and we feel there isn't a conflict of interest, I'd be willing to pull the trigger. This concludes my presentation. Thank you for listening.